It's Brad here from Equitum. I just thought I'd close out the week by sharing briefly with you some thoughts about what's happened with the Australian and the global markets this week, particularly the losses that have occurred around the world. The ASX, as you're no doubt aware, closed down 6% this week. We also had the biggest one-day loss since Brexit yesterday, which wiped $50 billion off of the stock exchange. It's certainly been front of mind for myself and the advice team and support staff here at Equitum, and something that we've had some discussions about this week as well. It just really serves as a timely reminder to focus on the fact that investments are long-term, not short-term. And that's by design and for very good reason, because it's very hard to manage day-to-day volatility with any investment markets. So any returns that are documented, that we discuss when we have our reviews and so on, are taken over a long-term period. So short-term, it can look quite scary, but I just wanted to share some information with you which might sort of put your mind at ease a little bit about markets in general. This first slide here is what's happened this week. As I mentioned yesterday, highlighted there in red was the largest loss that we've had in the last few years since Brexit, wiping $50 billion off of the stock exchange. As we progress through this sort of timeline, this is 1 month, which still doesn't look great. Even at 6 months, it sort of loses most of the gains that the ASX has received over the last 6 months. What's worth remembering, though, is when we invest, depending on your investment profile, not all of your money is invested in assets that may go up or down in value and fluctuate like this. But this is just a snapshot of what the ASX has done, and it's similar to what some of the growth markets overseas has done as well. One of the things to bear in mind too is that if you've invested recently where you don't have investment history or performance history, your investment history resets. It starts at 0%. The same thing happens if you actually roll an investment from one place to another. For example, moving a super fund from super provider A to super provider B. Your investment return resets and starts again at zero. The reason we take a long-term view of this is, as we have an example here on this slide, you may be lucky and get some great returns immediately after you do a rollover or invest some money, or you may be really unlucky and actually have a negative return. Now, when we communicate to you as regularly as we do on a weekly, monthly and a quarterly basis, and when you can log in and look at your performance and your returns on a daily basis if you wish to, being highly engaged like that is fantastic. But it also opens you up to understanding more about how volatile markets actually are on a day-to-day basis or even a weekly or a monthly basis. So just bear in mind that if you're looking at your returns and you haven't been invested in the market for more than 5 or 6 or 7 years, you do need to take that with a pinch of salt and not get too worried, because the investment time frame is just too short, too small to know really what the performance is likely to do. And that's why we look at history of performance, even though, as we always say, that's no indicator of future performance. What you do see, and we have done for hundreds of years, is off the back of a down period, there's an up period. So if we extrapolate that out a little bit further, this is over a 5-year period. What looks like a pretty bad week globally and for the ASX market isn't that significant when you really look at it over a 5-year period. Similarly, if you look at it over a 10-year period, it's even less significant again. Something that might surprise you, unless you really do keep close to your fund performances, is that what happened to us this week, and particularly yesterday, actually happens quite regularly. So if you actually have a look at the last 10 years, it's actually occurred over 21 times in 10 years. So that means 2 or 3 times a year, we have a pretty significant downturn, whether it's a day or a week or a month. These things happen actually quite routinely. So if you look at the short term, it can look a bit scary, but that's why we urge you to look at the long-term performance of anything that you're invested in. And that's the trend line that we try and focus on. So we try and weather these peaks and troughs of market risk and day-to-day performance to make sure that you get a good performance over the longer term. So it was just interesting for us this week to have a look at the markets. We certainly are hoping that next week we start experiencing the upturn off of what was a bit of a bloodbath this week. But as always, if you have any questions or comments or concerns, please feel free to reach out to myself and our advisors and our team here at Equitum. Otherwise, we hope you have a wonderful weekend. We look forward to speaking to you again soon, and let's hope the markets recover next week. Thanks very much. See you soon.